This
3,
conference will now be recorded.
1. Yo, what's up? Trade with Traders, Flex fam. Hope everybody had a great Monday. Good start to the week. Some good energy today. We had a lot of that follow through small cap, mid cap liquidity. So it's kind of like, knock on wood. I don't want to like jinx it or anything, but it kind of feels like we're getting some heat back in the market. I mean, it's been dried up. It's been illiquid. There hasn't been a lot of small cap, mid cap movers. A lot of the attention's been focused on some of the larger caps, a lot of the boring money. So the last couple of days, it's been nice to finally have some stuff pop up on radar and able to execute some of these trades. Last night's game plan, pretty comprehensive. I know I haven't had that kind of list in quite some time. So it felt good to have that list last night, albeit in the game plan, I wasn't, what ended up happening with MMEDF was kind of a little outside of what I would have put as scenario A, but nonetheless, it was still on the watch list. So hopefully some people made some money on that one. Personally, I fumbled the ball there. Just didn't play it at all. And then MVIS, I was able to capitalize a little bit off of. But again, it was like, I'll go over it in a second, but some of these levels just snuck up on you this morning and they just blasted through them and you never really had a chance to scale into it if you weren't in from Friday. But it's all good. Don't worry about the trades that you missed. It's all about staying patient and getting ready for the next one. But point is we're starting to get a little bit of I don't know what's the word we want to call it. Maybe some, I guess the first word you could use is hope. A little bit of hope when it comes to small mid cap, but no, I don't know. It's just a little bit of freshness, a little bit of I don't know, a little bit of spice, a little bit of something. Something's in the air with the small mid caps that I haven't felt for about 2 months now. So that's cool. It feels good to be in it, to be trading. The last 2 days, I've traded more in the last 2 days by about 500% more than I have the last 2 months. So what do I mean by that? So in the last 2 days, I've placed more buys and sells than I have over the last 2 months by 5 times, which is kind of mind-boggling to think about. But that's how quick it happens. That's how quick you can go from a dull market back into like there's stuff popping up all over the place. So it's a good feeling. It's cool. I've been very vocal about it. I drained my account a couple months ago, so it's not like I have a ton of capital that I'm working with. So I'm very selective right now. I'm being very selective about what I'm playing. It's really only my top 5. If this was back in January or February where I had a lot more capital in my account, I probably would have been in 15 trades today, but I narrowed it down to about 5 or 6 trades today. Then there were a couple other day trades I had, but yeah, for me, when I drain my account down, it's all about narrowing my focus and taking my time. I'm not in a rush to put a ton of size in any one trade. I'm still very much feeling it out. I'm still very much kind of getting back into the swing of things. Hopefully, no pun intended. But yeah, let's break down a couple charts here. Let me get the screen up. I mean, first and foremost, as we always do, I'll kind of touch briefly on SPY and QQQ. QQQ looks brilliant. QQQ is just a gorgeous setup. Today's hammer candlestick testing right at that breakout level, right at the top of this micro channel here. Super constructive. The only problem with a lot of these large caps, and I use the word problem, but that problem might not be the best adjective to use. I guess the only thing to consider is that there are a ton of earnings this week and next week and for the next couple weeks. So it's just something to take into consideration. The other thing you still need to take into consideration just how extended we are. We are still super extended. Keep that in the back of your mind. Don't forget about that. It's not relevant until it's relevant. You know what I mean? So it's just something to be cognizant about. But with all that being said, SPY and QQQ, broad market industrials, everything's looking constructive. There's nothing to trip yourself out over. It's just keeping in mind how extended we're getting from the 50 day. And like I'm saying, it's not relevant. You don't need to worry about it until you need to worry about it. Also, if you're curious where the glasses came from, they are blue light glasses. Blue light, I don't know, there's something about the blue light wavelength, I guess. I don't know. I'm not, all I know is like my sisters have recommended me to wear it, and I know, I mean, my girlfriend's talked about it. I guess they it helps like stabilize your melatonin levels, something like that. So these aren't reading glasses or anything like that. It's just like being in front of the screen for so long every day. And then like, if I'm playing video games at night or whatever, blue light glasses, good for you. Don't ask me how or why. I just know they are. But anyway, so yeah, that's broad market, all constructive, all looks good, nothing to trip out over. But it's just being cognizant of those two things, how extended we are and the fact that there are a ton of earnings this week. So keep that in the back of your head. Bitcoin, a tremendous recovery over the last 24 hours. You saw that 2-week long washout period, and then that bounce from 47,000 up to 54,000. 15% bounce. That's an awesome bounce. Again, I'm talking about it. I have a gut instinct here. My gut instinct is that we digest similar to this over the next several weeks. That doesn't mean we couldn't trend a little higher at some point. Maybe, I don't know, maybe retest. I mean, it wouldn't be the craziest thing in the world to think that we could retest 60,000. But again, my general thesis is that this consolidation, this micro channel that we are about to form, is going to break to the downside. And we're still weeks, maybe a month or two away from that happening. That thesis becomes invalid if we can get up towards 60,000, consolidate, and then get a higher high. But all of that's nor here nor there. We're kind of in limbo. That's kind of the long and the short of it. We're kind of in limbo right now with Bitcoin. And until we can form a pattern like here or here, and either clearly break to the upside, curl up out of it, or clearly break to the downside, consider us in limbo. So really, there's nothing to formulate here at this time. It's kind of that let it play out type of situation. Amazon, what a sick candle today. I guess there was some rumor or something popped up that there's the stock split proposal, which, I mean, would just be nuts if they crushed earnings Thursday, came out with a stock split, and then Jeff Bezos steps down as CEO. What a day in stock history that would be. And the setup is just super ripe. The only problem with Amazon at this juncture is just how expensive the premiums are. You're talking about an $80 premium, or what was it? I want to say it was $70 or $80 for the straddle. And let me double check that, because I made a couple trades on Amazon today, nothing crazy. So we close at 3-4. Jeez, yeah, $85 right now for the straddle. So that means you're paying around $8,500 for one contract right now, right at the straddle, right at the asking price, which is just nutty. That's just silly. But again, that's earnings week for you. That's especially on a name like this, or like Tesla or something like that. The premiums are always going to get jacked up to high heaven on earnings week. However, Premiums are jacked up. I have no interest playing into earnings. However, if we do, and let me clean that up. If we do, for whatever reason, get a huge blow off into Thursday and we go for that 3,600 new all-time high break, I mean, this is just what we want to see. We want to see some kind of consolidation up here right under the all-time high. This would be the most ideal look for us. And, you know, we just got to kind of cross our fingers that we don't just blow through all-time high and it just becomes like a full-blown chase. I mean, it sure looks like it's setting up that way, but unfortunately, when the premiums are expensive as they are, being earnings week, it's just impossible because it's such a gamble. If you're wrong, you're effed. You're screwed. You're losing all your money. So my biggest piece of advice is wait out earnings, let the dust settle a little bit, and see if we develop a pattern. And if we don't, so be it. There's always going to be another setup down the road somewhere. But Amazon's definitely becoming super interesting. MVIS, man, it's too bad that today's candle was like, oh man, I was so ready. I was ready for this exact trade, but I wasn't ready for it to be today. You know what I mean? If you watched yesterday's video, I was saying something along the lines of this. I wanted to see a week or so consolidation in that $14 to $20 range. I said that was scenario A. And of course, I highlighted the big level as 20. I highlighted that level. So gapping over that level, and I had a little position going into the open today, and I trimmed half of it at the open. And then once it got up to $22, $22.50, I trimmed my other half. So really, I was out, you know, $20 and $22.50. And of course, you know, just so I guess talking about my mindset behind that, my sell, for me, you know, I haven't traded much in the better part of the last month, 2 months. So to wake up, have that gap up, and you know, start the week off green, it was no brainer for me. I was like, okay, I'm gonna lock this up, lock this profit in. Absolutely no brainer for me. So just going into a little bit behind the psychology, it's like, you know, obviously that was the big low. I talked about it on last night's webinar for 5 minutes. But coming into the week, not having a green trade, I mean, not having any trades for the last 2 months, but not having a green trade for the better part of the last 2 months, psychologically, it was very rejuvenating to start the week off with that green trade. And you know, it wasn't like I was bummed that it kept going. That's not, you know, when I say I'm bummed, it's just in the sense that, you know, damn, it was such a good setup and I was all over it. I was all over the level. So, you know, it is what it is. You miss out on the trade, but a profit's a profit. So I'm not complaining about taking a profit. Anyway, that's in the past. I'm over it. Who cares? You know, I left money on the table, whatever. You know, I don't lose sleep at night over leaving money on the table. You know, I personally, I think if you're losing sleep over leaving money on the table, you're still very, very much in that amateur mindset. You need to snap that mindset and think of it differently. Think of it as, I had my profit, I got out with a win. A win's a win. That's the mindset. So who cares? On to the next trade. So here's the next trade. Again, I'm going to lay it out in terms of like scenario A, scenario B. Of course, scenario A from that I talked about yesterday, well, you know, that didn't happen. So what we can, I guess, hope for again going forward is something kind of similar. If we could consolidate for a couple days, like a 1 or 2 day flag up here in that $21 to $24 range, something like that. Even like an inside candle tomorrow, like if we gap down tomorrow, but as long as we're inside of today's candles range, something like that. But really the take home point is if we get a nice high and tight, that's what I want to make the next trade-off, because I still think with this kind of volume you cannot ignore. This is insane dollar volume. It's insane liquidity. It's so hard to ignore it. Um, I don't believe it's sustainable, but at the same time, it's impossible to ignore it. So the most ideal scenario is a couple days of flagging up here, and then if it retests that $28 breakout spot, maybe make a trade for a $32 to $35 type of blow off trade. But again, that's scenario A. Scenario B, which is if you're thinking in terms of like day trading it, is just joining trend tomorrow. As long as the trend is your friend, joining it for intraday scalps, it's one of those super liquid blow off candles, but you can't be using the same kind of size up here, right? So just be cautious of that, right? Don't be going all in on your scalp trades up here, and be quick with it. If you get a 50-cent move or a dollar move, right? This is still very much see profit, take profit. But again, I'm still not looking to put effort into day trade scalping type of situations. For me, the best trade here is if we get that couple day flag and then we can play the breakout again. But yeah, I mean, the $20 level was no brainer. I outlined it. I talked about it, and I fumbled it. Is what it is. On to the next. GME. GME highlighted this one earlier for you guys, around 167 or so, and it popped up to close to $200 after hours. I think it hit like 197 or something like that. So I have a couple contracts. I had some shares. I trimmed the shares at about 185 in after hours, and I still have a couple contracts that I'm probably going to sell right at the open tomorrow. But pretty much here's the thought process behind this trade idea. I mean, you see this upper trend line, this lower trend line, and then this inflection level that I was outlining right there at around 175. To me, it was like, okay, if this gets to 175 and there's a little bit of volume right above 175, this thing could rip quick to 200 or 220, and we saw it hit almost 200 after hours. So kudos if you took the trade. If you didn't, it's a good setup to study. It's a good pattern. It actually reminds me quite a lot of, or it's similar-ish to like, and if you go back to like the hourly time frame down here and the hourly time frame here too, it's similar. You've got the multi-month, multi-week consolidation, and then you get to the point where you've got a couple key inflection spots and you break over and it's a quick 10-15% move. And that's the market we're in right now. I'm looking to make those 10-20% moves. I'll take my money all day long. So yeah, I mean, if you made money on it, awesome, good job, well done. If not, it's a good one to study. It's a clean setup, good pattern. But yeah, game plan here is to trim open tomorrow, and we'll take it from there. RAIL, rail, still paying attention. Nothing's changed here. $8, still that breakout spot to make a trade on for $10, $11, $12. And I'll probably I'm still using 5.5 upper fives as my risk. And also keeping close tabs on the volume. If we get back up to 15, 20, 30 million volume bars and we're getting big candles, it's time to really start paying attention. MMEDF, another one I covered kind of in detail yesterday, but again, it was another one that I outlined as, I wanted to see some consolidation. I was very, very adamant on the fact that I thought that Friday's candle was pretty unsustainable, and just flat out, I was wrong. We had another huge gap up this morning. bigger volume this morning and we retested all-time highs. So to my credit though, so I was wrong in that, but I did say I didn't expect this gap to fill. I said no way that, you know, don't expect that gap to fill. So I got half the call right, but in all seriousness, I was wrong about that part of it, and you know that's totally okay. That's totally fine. Now where we go from here? Well, we retested all-time highs. So if I was thinking that the candle was unsustainable from yesterday, I really think that this candle is unsustainable now. And I'm not, you know, it's not like I'm short or anything like that. So it's not like I'm actually putting my money where my mouth is when I say this, but I do think, and I'm doubling down here, I do think it's overdue for at least a 2 or 3 day period of consolidating, which again, if it does, and then it goes and re-breaks, retests and breaks that $5 mark, shoot, this could speed up to $6 or $7 in a hurry. But scenario A, best case scenario, is if we get a look similar to like here. And it could even be more condensed. It could even be shorter. But this is essentially what I'm looking to watch happen up here. Volume is fantastic. You can't ask for better volume. And keep in mind, once this uplists, the volume, and go back and reference this in a few days, the volume is going to be like this, or like up here. The volume is going to dwarf what we've seen recently. Once it uplists, the volume automatically is going to be 3, 4, 5x. Just trust me. It's just, that's just how it's going to work, because there's going to be so many more market makers. There's just going to be so much more liquidity. So the volume that's about to come once it does uplist is going to be way, way, way more than what it is now. So today's candle was around $23 million or 23 million shares. I could see this hitting 50 to 80 million shares traded over the next few sessions once it uplists. So this thing is not going to just die. Don't think that this is just going to go back to 350 or fill this gap at 250. This thing's here to stay. So we have to keep close tabs. This is scenario A though. And again, we'll update you. We'll remind you if there's anything new. And then going down the list, we'll breeze through these because I've talked about it a few times. 1850 still the spot to watch here. On TLRY, the game plan: scale, scale, scale. Scale on washouts, scale on low volume washouts using 15, 15.5 as risk. LAC, same thing. We had a nice candle today. Same thing though, using that $13 mark as risk and just kind of letting this trade play out. Like we talked about with Blink, same thing. BLNK, that $35 mark, that's the risk, letting this one play out. So yeah, I mean, really the top ones that I'm going to be paying attention to for that high and tight look: MVIS, Amazon, MMEDF, and then RAIL, looking for that breakout spot, keeping my risk in mind. So really a lot of stuff, similar game plan to what I talked about last night, just elaborating a little bit more. But yeah, I mean, if anything new pops up on radar or anything like that, I'll be the first to let you guys know. But yeah, I mean, that's the game plan. That's where my mind's at. Feels good. It feels good to be getting kind of back into trading a little bit, getting part of the action. Like I talked about the other day, I haven't made money. I haven't lost money, but I haven't made money in the better part of 2 months. So to finally have a couple days where I'm getting back into it, making some money, it feels good. But it's like I said, it's a transition. I'm not just blasting everything on my screen all at once. You know, it was very it was a big thing for me to take a step back and take a break and relax and reset the chakras a little bit and just kind of take a little break. But getting back into it, you can't just jump into the deep end. You got to get your toes wet. You got to get your torso wet. You gotta wade in. You gotta take it easy. You know, don't just dive headfirst into the deep end. So And I know there's probably plenty of you guys that have scaled back your trading too tremendously. So when you see a watch list like I just did, don't think to yourself, oh crap, Matt's watching 10 stocks, so I need to be in all 10 of them. No, chances are I don't even trade all of these. Chances are I trade half of them. There might even be a chance I only trade one or two of them. Don't just assume I'm making a trade on every single one. It's just a general tentative game plan, and I take it easy, especially considering my capital is tremendously less than what I had several months back. So yeah, that's it. That's the webinar, guys. Hope everybody has a great Tuesday. I might even do a midday update tomorrow. We'll see. But yeah, hope everybody has a great day tomorrow, and keep killing it. Stay well and be good, guys. I'm out. Peace and love.